Hello, welcome to the European Open briefing for Wednesday, July the 19th. I'm Rafi Barjan, currency analyst, and we're going to be looking at what's happening in the currency markets today. So it is a rather quiet start to the trading day. Of course, we're seeing much of yesterday's moves following the developments in the US Senate, where the Republicans failed to win enough support for the healthcare bill. That, of course, has put a lot of pressure on the US dollar because it puts into question whether or not the Trump administration will be able to see through its tax reforms later in the year, and even if they do manage to get those through, the fact that they haven't managed to get the spending cuts that were needed to fund the tax cuts, we might not see much significant fiscal stimulus. So that, of course, means the U.S. growth will not be as strong as many investors had been betting on the past few months. So that was one of the main drivers of the US dollar, at least up until early this year. So that, of course, has boosted other majors. The euro has broken above $1.15. We have the ECB policy meeting tomorrow, so there's a little bit of caution ahead of that. We're seeing the euro pull back from those highs it saw yesterday. The pound, though, had been benefiting from the weaker dollar up until early yesterday, but we did have surprisingly weak inflation numbers out of the UK that dragged the pound back below the key 1.31 level. But commodity currencies are one of the biggest beneficiaries of the weaker dollar. The Aussie in particular continues to make fresh highs against its US counterpart. It's at a 2-year high at the moment, but despite many commodities benefiting from the weaker dollar, gold and oil are not doing so well. They're both, well, gold at least was slightly down. Oil has managed to recover some of its earlier losses. But let's start with the dollar. Now we can see in the chart the dollar index and the dollar yen have been pretty much moving together over the past couple of days. We can see both of them have come off yesterday's lows. The dollar index hit a fresh 10 months low of 94.48, and the dollar yen fell to 3-week low 111.66. Dollar yen is back above the 112 level, and that's because the US Treasury yields have managed to recover from their 3-week lows of 2.257 yesterday to around 2.27 today. So apart from what's happening with Trump's policies, of course, we did have weak data out of the US recently. That's been weighing on the prospect of further rate increases by the Fed this year. We had Janet Yellen's testimony last week where she was a bit more cautious than usual. So it is looking rather bearish at the moment for the greenback. But the euro, on the other hand, is making fresh highs. It did make another 14-month peak of 1.1583. That puts it very close to the May 2016 peak of 1.1614. We do have the ECB policy meeting tomorrow. It is expected that the ECB will potentially signal that they will use the September meeting to announce some sort of tapering for its asset purchases. They might even make further tweaks to their forward guidance as early as tomorrow, but given the euro's recent gains, it is possible that Mario Draghi will probably be choosing his words very carefully so as not to trigger further rallies in the euro. The pound, we can see that did drop sharply yesterday. That came after a UK inflation release. We saw CPI falling to 2.6% from 2.9%. The expected was it would stay unchanged at 2.9%. This does take the pressure a little bit off the Bank of England to raise rates sooner rather than later. We saw sterling tumbling 0.8% against the greenback to just above the 1.30 level. It has firmed just a little bit today at around, currently trading around 1.3030. Moving on to the Australian and New Zealand dollars, we can see the Aussie continues to make strong gains against the greenback. It hit a fresh 2-year high of 0.7946 a short while ago. We had the RBA meeting minutes yesterday, which were a bit more upbeat than what we heard at their meeting statement for early in the month. And also the RBA in the RBA meeting minutes, there was some reference to the neutral rate of interest rates for Australia, and the RBA did lower its neutral rate, so that has lowered the expectations of how far interest rates will go up in Australia, even once the RBA does decide to raise rates. And of course, we're seeing higher commodity prices, particularly iron ore, which Australia is very dependent on. The rally in commodity prices comes after strong data out of China we saw earlier in the week. And the New Zealand dollar is also benefiting from all this. Yesterday we saw the Kiwi thrown off course a little bit from the softer than expected inflation numbers out of New Zealand. We saw a big plunge before it quickly recovered again. Today it's at an 8-month high of 0.7387. We did have dairy auction yesterday. We saw a very modest increase in dairy prices that didn't really have much of an impact on the Kiwi. Moving on to oil prices, we did have the API inventory numbers yesterday. That's the American Petroleum Institute. They're usually out every Tuesday and followed on Wednesday by the official US Energy Department figures. The API numbers are usually a good indication of what we'll see today. They showed inventories were up by 1.6 million barrels versus expectations of a drawdown of 3.2 million barrels. So we saw oil prices dropped back yesterday, although not that much, and they have stabilized. They did manage to stabilize rather quickly. US crude is currently trading near the $46.50 barrel level, and we can see that that's provided just a modest boost to the loonie. The loonie yesterday did reach the highest since May 2016, touching 1.2578 against the US dollar. But gold hasn't really been able to make significant gains despite the weaker dollar. It did manage to make 2.5-week high yesterday, though it's slightly down today. Looking at today's economic calendar, it's going to be a very quiet day. We just have building permits and housing starts out of the US and manufacturing numbers out of Canada. That's it from me. Thank you very much for watching and have a great day.